Hey everybody, this is Jim at SP500chart.com. It's about 4:30 on Sunday afternoon, May 18th, 2014. We're going to take a look at the week, see if we can make sense out of it. And I say that sincerely. Tough sledding here. Really hard to get any real clear picture. The market seems to have a real lack of direction. And you know something? That certainly is borne out in the chart. So, before we get started, let me remind you as always that the website and this video are for educational purposes only. Nothing stated at the side or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research. And please, make investment decisions that are suitable for your personal financial situation. Do not invest this month's rent money. And I'll remind you again, I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Starting out on a 30-minute chart, at one point during the week, this line was a little different. We had this still down at 1884 or around 1890 or so, and it looked on that nice gap up that we had on Monday, follow through on Tuesday, closing at an all-time high on Monday. Then starting to sell back a little bit on Tuesday, and then Wednesday early. Then all of a sudden, the bottom gave out, and we find ourselves again under 1884. Not quite down to the 1840, 1850 zone, but looking kind of like it's going that way. Now here's the problem. Because we have so many turns and twists over the past 12 weeks, you can almost find one of these little short-term tops or short-term bottoms. You can almost find one to make it say whatever you want it to say. For example, if we use this right here, well, that's bearish. We broke this broke this support line. Now it should become resistance. And if that's the case, then we look at what took place on Thursday and Friday and say we had a significant break, and now we are just back testing this line. Excuse me. And if that's all we have, then I would say, yeah, we're in a bearish condition. However, we've got this little bottom back here. If instead we took this line and move it here, and then line it up with this same point there, you go, wait a minute, no, actually, we are staying in between this line and we'll adjust this line to there. We're actually now in a rising channel. You know, either one has something that could be latched onto to support whatever your particular view, bull or bear. And for that reason, I'm going to do what I've been doing all along. And that is, I'm just going to go with the close over 1900 or a significant break under 1840, 1850. Even though we had such a break back in the middle of April, it didn't really pan out as being that technically significant an event. At least not yet. So, let's take a look at the week and a little bit closer to detail after I adjust this line. I'm going to put this line back where it was. I'm sticking with that for now, because that makes a little bit more sense than ignoring this bottom in the middle of April. So let's zip in a little bit to 10 minutes. Mentioned on Thursday that it looked like we might be making a bear flag here, with the idea that if this little pattern bounded by these two blue lines were to break down, then we should be seeing a move to likely test 1840 to 1850. Well, that breakdown did occur, but that test of that level did not take place. However, we have not overcome this pattern. We could be just back testing it, and it could be we want to come back to this green line. If we reach that green line on Monday, I think you have to respect the tendency of charts and say, I would expect that to present resistance. So let's do the weekly review. The weekly review is we got up over 1900 on Monday. We opened up over 1900 on Tuesday. At the time, our resistance line was right here. And it looked like we might just be back testing this line throughout the day on Tuesday, but you can see clearly Wednesday morning that broke. We went sideways for a bit, and then it broke down a little harder, and it was Thursday where we really gave up significant ground, where at one point the markets were off, assuming our close at about 1888. At one point, the markets were off about 26 points, roughly 1.33%. Then we started this little sideways trek. Now, in all honesty, I have to point out that this stopped on the back test of another trend line. See, this is what makes this so tough. We could make a literal picture of string art from this chart if we wanted to draw every top across every bottom, across every other bottom, and then bottoms and tops. Literally, this line is just a bird's nest of lines, and it's hard to know what's the important ones and what's the unimportant ones. I think it is safe to say now, with this top right here combined with this top that took place back in early April, that I'm going to slightly amend. It's no longer 1884, 1885. I'm going to call it this line right here. It is now a more discrete line that has a better history with what we saw take place over this past week. So there is a positive takeaway. And that positive takeaway is we have a clearer line of resistance that we need to get over. Along with that, we could also be looking, potentially, if we get over this line, we could be looking at a potentially even larger continuation pattern. So this is what I see, one of two things. And then I'm going to let this kind of lay this video to rest, because we're still in this middle area. We've beat that horse until it is a bloody pulp. I don't want to do that anymore. Here's the deal. This is a resistance line. This is a support area, but also down here at about 1814, I think is fairly important too. And here's why. And there's a bullish case and there's a bearish case. We won't know until one of them proves out. The good news is there is enough expected move from these patterns to where whichever one plays out, there's money to be made. If we get over this line here, I believe this will work. Potentially call it a larger inverted head and shoulders pattern if you want to, with the left shoulder, a head, and then a right shoulder. And it's a little bit of a diamond pattern because we don't have that solid touch over here before the formation of that left shoulder. But if we were to rally up over this line, then we would measure the depth of this, and we actually end up with a more impressive target that would be close to 2,000. But we got to get over that line. So this 1957 target, based upon the where we saw the high in this past week, I believe that changes this overall picture to where if we get over this line, we have a more aggressive target. Now, we also have the potential of this being a double top. We won't know that until we break down through about 1814. And I would say that should be followed through with a close under 1800. So this gets interesting. If we were to do that, then we would be looking at a minimum target in the 1730s based upon the size of this double top. So in essence, what was a fairly narrow range between 1840, 1850, and 1884, 1885 is now expanded somewhat to where this is our new line of resistance. And I'm just going to take this line we've had at 1801 and I'm going to scoot it up. Forget why it was there. This is now a new horizontal line at a level that, should it be broken by a technically significant margin, would turn this into a very, would confirm this as a double top. So that's a range, isn't it? So I think going forward, we now start to look for either a move to the 1730s or a move to the where was that? 1990s. 260-point difference between which way this breaks. But I'll remind you that a third of that fully is inside this pattern itself. So guys, let's keep an eye on it this week. Let's see if we get a bounce. If we do, it could be at this gray line here. And if we get that bounce, will we come up and attack this line again? I think this is getting maybe even a little bit more interesting with the widening and the enlarging of this pattern that we've seen develop over the course of the last 12 weeks. So hang with it. Let's hope we get a little bit more clarity coming into the week starting May 19th. Now, one thing I just want to say quickly, I'm not saying that this 1840 to 1850 area is not still important. I just don't think it is as important now as this level down here because of the lows we saw in mid-April and now that secondary high that failed to break and head on up to the to over 1900 with a good close. That tells me this is stronger resistance now, and it tells me also that if we were to come down and take this out, then that strong resistance would become that double top. But there's still the possibility of an inverted head and shoulders. Sadly, we won't know until one of these things shows itself with a breakout or a breakdown. Finally, I want to say one more thing. Monday and Tuesday's videos will be late. They will be done at some time in the evening, probably 10:30 Eastern Daylight Savings Time, just due to my schedule. It's the way it's going to be. So that will be on Monday and Tuesday. Thursday will also likely be the same thing. So this week's going to be a little different with the timing. I'm not going to be able to get the thing up within about an hour after the close. Monday, Tuesday, and Thursday we'll be looking at a nighttime release sometime between 10 and 11 p.m. Eastern Daylight Time. Thanks for watching. Take care.